new, lately inaugurated segment, Bhavcopy, where Mangalam tells you about stocks that have seen a dramatic price improvement, and he tells us if the buzz is warranted. Mangalam, what's on your radar today?
Well, Lata, thank you for that. The stock on my radar today is Shalimar Paints. As we've seen, it's been buzzing around for a while. In fact, in the last two trading sessions itself, the stock has surged around 36%. And if you look at the stock from July 27th, it's risen 52%. Why July 27th? Well, Asian Paints came out with its quarterly results on that day, and they were a good set. So in anticipation of that, in anticipation of good results coming in from the sector itself, we saw a run-up in this stock. But if you look at it from a longer perspective, since February lows, the stock has surged 131%. And despite that run up, if you look at the market cap of the company, it is, as compared to the other peers, listed peers, a micro cap, 385 crore worth market cap, which is less than 5% of its next listed peer, AkzoNobel, which has the Dulux brand of paints. Kansai, Nerolac, Berger and Asian Paints are anywhere between 20,000 to 1 lakh crores. And if you look at the financial performance as well, not very inspiring, because if you look at the last 5 years, Shalimar Paints' top line has grown at a compounded rate of just 3.5%. And if you look at the return on equity too, in the last 5 years, it has grown at a paltry 7.3%. In the last 3 years, it has actually been negative. The company is highly indebted as compared to its market cap. So the total debt on books as of last fiscal is close to 128 crores. And if you look at the FY16 operating profit, it's around 26 crores, and 22 crores of this 26 crores goes into servicing that debt. The finance cost is around 22 crores. If you look at this quarter, the first quarter of FY17, they did show some revenue growth of 12.5%, which is the highest in the industry. But remember, this comes on a small base. And secondly, the whole industry itself in this quarter showed double-digit volume growth. That leaves us with another thing. They sell a lot of distemper, which is the low-priced variant of paints, and that's why they have the lowest margins in the industry. In fact, the only one from the listed players which have single-digit margins. And the valuations, after the run-up, there is not much headroom as far as the valuations are concerned. To last year, remember, they did an EPS of around 2.8 rupees. Last quarter, fourth quarter, they did an EPS of about 2 rupees. So even if you take that forward to about 4.5 rupees, the stock trades at 50 times FY17 earnings, which is pretty much in line. In fact, we have Dulux, which is trading at 33x. So what could explain this buzz? Well, it's a 385 crore market cap company. It does have a strong brand, so perhaps could be an acquisition candidate. I have written to the company asking them about that, and they are yet to respond.
Okay, point taken.